And Carley, welcome back to F.A.C.E. Great to have you.
Thank you.
I'm
It's
a
good to be
fan.
here, Dale. Good morning.
I'm a fan.
Oh, thank you.
So
Likewise.
so I'm interested what's on the menu. But before we get started with that, I recall last time you were here, you were looking for a dollar top. You and I think it was 112 or so, and we had that one
hmm
more push up to 114.
Yeah.
And you weren't here, but I know people that see you and follow your work, and when they tell me what you're doing, I pay attention. And you were calling for the dollar top up there and looking for it to trade under par. Is that still where you're at?
That is still the case. Are you ready for me to share my screen
Yeah,
or no? Okay,
sure.
let's do that.
So very nice forecast. I was kind of thinking we might get some kind of rally from the 102 level just because it was such a prolific bull market that there'd be some echo strength. I mean, we've already come off 12 figs in a month or so. Do you have anything there for a rebound, or we're just going to head right to 97?
Well, can you see the chart
Yeah,
here that
it's
I'm
a
showing?
beautiful
Okay,
chart.
perfect.
Yeah,
Okay,
yeah.
beautiful. Okay,
Okay.
so my window's a little small, but you can see this line here that showed potential top at 114. Now, to be honest, when we were trading in these areas,
Yeah,
I was a little iffy. I mean, that was a ridiculous move, to be honest. It took a
yeah.
lot of things to align for that to happen, but it happened, and sure enough, that area hold. And now, what was key to me is a break below 105. So this
Yeah,
area right here was kind of a more reasonable trend line. You see, you take out some of these outliers.
right.
So this trend line is significant to me, and I see it as a pivot. If we stay below 105, then
Got
I
it.
think as long as that continues, we're headed to 97. Now, you know how this is. It generally isn't a smooth ride. It's not a straight shot, but that's the projection. If we do break above 105, we're probably looking at some digestion. I don't really expect it to get much above, somewhere around 109, somewhere in there.
Okay.
But let's see what it does with 105. Basically, slightly bullish above, but pretty bearish below. And I think
Okay.
the ultimate target's 97. So we'll see how that goes. The
Okay.
RSI, this is a
I'm with
weekly
you.
chart, by the way.
Okay.
RSI still shows some room to move, and so that's where we sit.
Okay. A very nice looking chart, and had a different pivot than me, but I really like your lines. So people take a screenshot or watch a video later. So, okay, what do you want to move to now? I bottom picked the crude. It's we
Okay.
kind of think a lot. You and I, kind of contrarian, inflection point type of. That's what we look for.
Right.
What are you thinking here?
So I actually shared this chart on Mad Money on Tuesday night, I think it was. This chart and a
Okay.
few others. This is crude oil.
Yeah.
This is a weekly chart.
Okay.
And basically, I may or may not have mentioned this on our last interview, but the overall premise to me is, had we not had COVID, which was, I think we can all agree, a black swan event, and then
Okay.
had we not had the Russian invasion, which also, in my opinion, is a black swan event, oil probably would have been trading in this trading range. But we
Yeah.
had those events that pushed us outside, and eventually we
Interesting.
came back in the range. Um, the the range started from 40 to 65. It's inclining. So now we're looking at 70 and 95 as this range. And unless there's another black swan event, I expect that to be the range. So that 70 print, I think, was probably the low. I mean, you know how holiday markets are.
Yeah. Can't
It's in,
trust them.
you can't, that's a good way to put it. You cannot trust them. So I cannot say that was the low and we're just absolutely going higher from here. I really wouldn't be shocked to see a retest, and maybe even, sometimes oil treats trend lines like suggestions, not rules. That's just the type of market it is. So I wouldn't be shocked to see it come down and test 65, which is the 200-day moving average. But the big picture is we're
Yeah.
in the process of bottoming, in my opinion. I could be dead wrong, but this is
Well,
what I'm
it's
thinking.
not just your opinion, because I saw Mark Fisher of
hmm
MB Trading. He's kind of a
Okay.
legend, isn't he?
Yeah.
And so he was either in F.A.C.E. or saw your piece on Mad Money, because he's pretty bullish. He said,
Oh,
you
cool.
just can't. Yeah, no guarantees, but it just made
Right.
sense at those levels. So
Sure. It
anyway,
does.
Okay,
It makes
so
sense. Yeah.
yeah. Can you make sense out of what's happening with precious metals with today? Are we finally going to see some type of correction or
Um,
whatever else you wanted to show?
sure. No, we can go to precious metals. So this is a
Okay,
weekly chart of gold,
all
and
right.
um, gold has been kind of disappointing for a lot of people. It just has had a hard time. I mean, this isn't an environment where you would assume gold would perform very
Yeah,
well, and it hasn't, mostly because the dollar strength. And now that the dollar's starting to roll over, gold has been helped out a little bit. Um, I honestly, in the long run, I'm bullish gold. I think we're going
right.
to 2100 or maybe even higher. One of my friends, Bob Iacchino, mentioned
No,
on Bloomberg the other day, 2800s in the cards for next year. And honestly, I don't think he's that off base. I think it is possible. I think what
yeah,
happened is the higher dollar basically just kind of acted as a weight or a plow hitched onto the market. And now that if the higher dollar is behind us, which I think it is, that'll just kind of unhitch the plow and it'll allow metals prices to move higher. Um, so long
so,
run, I'm bullish. Yeah.
okay. So your key level on a pullback is that red line?
Yeah. Yeah. So this is the chart. Unfortunately, the chart's not as easy as that. The chart is really messy. So we're hovering right here. This is a trend line, dates back to 2018, and it's just a real simple, nothing
Yeah,
magic here. Trend line, and we're basically right on that. I consider it a pivot area more than a necessarily a trend line, but that it is a trend line. So basically above it, which it's right now, it's about 1780. Above it's bullish, below it is bearish in the short run, not long run
yeah,
here. We're talking days and weeks, not months. And
okay,
we're just right there. So it's 50-50. If it does pull back, I'd love to see it hold 1700. If it holds 1700 on a pullback, that is very bullish because that puts these support levels in play
yeah.
and kind of takes away the bearish sentiment underneath. So I'd love to see it hold 1700. I think if anyone that wants to be long gold could maybe, watch to see what it does at that level to just maybe take some action.
Yeah, that could be some people talking about that would form a right shoulder there with the neckline being the recent highs.
Yeah,
Can you
absolutely. I see it.
visualize that? Yeah.
I see it. Yeah, you're right.
Okay, so silver's
Even better.
outperformed. Uh, the chart's got to look better. Yeah. But look
Yeah.
at, oh, okay.
Okay. Now these charts are pretty messy. I have a lot of lines on. Honestly, this year's been so messy that there's just a lot of things going on. Silver's a little bit silver's more unruly than gold. So
Yeah,
the chart tends to be a lot messier, but this is basically the same general pivot line. You do see during COVID, silver just went off the charts
right.
nuts down here, but that's how silver is. So silver did hold its pivot line. It's trading below. I do think in the short run, we probably pull back. I'd love to see it hold the 200-day moving average, which is, whoops, somewhere
Weekly.
around 21. Yeah, this is on a weekly. I'm sorry, a 200-week
Okay.
average. You're correct.
Okay.
$21. So as long as
Yeah.
it stays above $21, I think the trend change is in effect. And
Okay.
ideally, if you're a bull, you want to see a break above 24. I think that's where kind of the floodgates open. If it gets above 24,
Yeah.
24.50, we start looking at high 20s. And to be honest, I think at some point this year, we're going to see low 30s. So that'd be way up here.
Okay. All right. And how about risk, Carly? S&Ps? Dow? Any stock index that?
So yeah, the next couple of weeks in the S&P is going to be really tricky, but it's also going to be very telling because seasonally, we all know Santa Claus rally,
Yeah.
triple witch rally, or quadruple witch, whatever you want to call it. Usually the market goes up this time of year because usually the pain trade is higher, and that's just kind of how it works. I've kind of concluded throughout my career that what I think is happening is the market just really thins out. The traders are gone. It's more the buy and
Right.
holders are sitting there enjoying their holiday dinners. And it's the few traders that are left in the market. They generally are probably short and they just get squeezed out. And so that happens more often than not. What happens this year is who knows, but the odds are probably get a little bit of a short squeeze at some point.
Okay.
Chart
Do you
wise
think
tells
we
a
could
little.
trade down to your blue channel line at the bottom?
I think that's
Some
something that could,
intersection there.
yeah, I do think that's something that could happen next year. So
Yeah.
the first area, the first big support level is going to be about 38.30. If we break that, and I'm not saying the next couple weeks, this would take some time. If we break that, we're looking at like 34s, 33s, depending on how fast it does it. This is kind of pretty similar to what your previous speaker was talking about. So I do see that as a possibility. Wouldn't be shocked. We've seen, markets like to put in bottoms in March. It just happens. Don't ask me why, but it happens a lot. So I wouldn't be shocked to see a rough February, January period, and then maybe in March we kind of capitulate and finally get this over with. And that would probably look like some test of this blue line, or maybe, markets sometimes just get out of hand. And so if that happens, we're probably looking at somewhere in the 32s. I wouldn't be surprised to see that. But if those levels were seen, I'd say that's probably a really good place to consider getting aggressive on the bullish
side. I like
side.
that cyclical march, into the spring equinox.
Right.
So why don't we talk about something else that may have shifted? You have a view on TLT or bonds? Had a tremendous rally. It's really not giving back much. Would you be a buyer on a break here in the bonds?
I believe so. Believe it or not, the last, basically the month of December is actually generally seasonally bearish for bonds, and we haven't really seen that. It's just we've been holding gains. I mean, it hasn't been rallying like gangbusters, but it's been holding gains. So that's a bullish sign to me. Also, the bonds aren't reacting the same way they used to Fed's, to the Fed's hawkish talk. The Fed comes out and tries to talk the bond market down, and it actually has been going up. So that's kind of a big shift in tone. And I think that, I think that the trend has changed. I think we wiped out. I mean, that was really painful for a lot of people, traders and investors. That was brutal, myself included. So
I tried them early too.
I mean, but who? Well, at these levels, they said this was like the worst year in bonds since 1870 or something. I mean, so who could have seen that coming? That's just insane.
Abe Lincoln wasn't,
there you go. So this is a really big trend line that dates way back. And so we're looking at that. Currently, we're poking above it. As long as it stays above that, and it's about, we'll just call it 129. As long as it stays above 129, I think it looks really good for continued grind higher. If we break below 129, I think this stuff is behind us. I think we're not going to see that kind of painful crash, for lack of a better word. But we could see the mid 20s in the 30-year bond future. But so this is not TLT. Obviously, these are futures. They're priced different. But just to give you an idea, basically, things are looking pretty good. And as long as we don't get any real dramatic sell-offs from here, I think it's just grind higher. And I'm going to pull up the 10-year note future just real quick so you can see how dramatic this move has been. We need to see the 10-year break above about 115. If it gets above 115, I think that opens the door. And I think we could return at some point. This is going to take a long time, but at some point, I think we get all the way back up to the 130s. So we're talking about yields.
260.
Yeah, in the twos, maybe even the high ones is not out of the cards. I know it seems impossible now, but these things, since the Fed's become
reversion trade.
Yeah, exactly. And since we, let's just say the Fed's been interfering with things, the volatility has just gotten bigger and bigger and bigger every year. Let me see if I have this monthly chart here. You can see this is pretty much the square. Is where the Fed started really getting involved. And you can see we went from, when I first got in this business, a 1-point handle in the bonds was like a huge day. If you saw 2, that was probably blowing up a lot of accounts. Now we're not, 1 or 2 handles is nothing. We see these kinds of moves all the time. It's just, the volatility is just so massive. And by the way, I'm glad I pulled this chart up. So in the bond future, we need to print about 135 or so to get back into the more normal range. It kind of wipes out that silly crash. Yeah, exactly.
It was a crash. Yeah,
it was.
Okay. Well, gosh, some great looks, and really appreciate all your views, Carley.
Sure.
So best way for people to, I know you're a broker, so if people want to trade futures, trade options, they can do it through you and your IB. You want to let people know how they could get a hold of you to do so?
Absolutely. So we are an introducing broker. We're basically a boutique futures and options brokerage. This is our website, decarleytrading.com. We offer full service brokerage as well as discount online. So the difference between trading with us and trading with a bigger house that you've maybe heard of a little more is we are much more hands-on. So we charge $1 or $2 extra for online trading, but we answer our phones, we answer our emails, and we're not just clerks answering the phones. We actually we don't know everything, but we know a lot. We have a lot of experience, so we can make sure that everyone's questions are answered, things are running smoothly, and give people the best chance to survive, because we all know this is not an easy business.
Yeah, I'm going to give you a tagline I used to use when I was a broker, and you could use it. It's my Christmas gift to you.
Okay. All
And
right.
it goes like this. It's not what it costs you to clear a trade. It's what you clear on the trade.
Thank you. Yes, I love that.
You want to
Yes.
use it?
I might use that. Yeah, I'm jotting
Yeah,
it
all right.
down now. I usually,
Anyone like that? I mean,
yeah,
of course, you don't want to pay 10% commissions
right.
like you have to buy physical silver, but I did it anyway. If you want it, you do it. You just buy them. But anyway, that's really the truth, because you could get bare bone service and clear cheap and blow
Mhm.
yourself up, and commissions weren't the problem. So
Correct.
the problem's knowing how to be tactical in the market and manage risks. So
Exactly. I
appreciate you,
usually,
Carly. Yeah, go
thank
ahead.
you. My tagline is usually you get what you pay for. So it's the same
Yeah,
thing.
yeah.
I talk to a lot of people that 99% of the time they don't need someone to help them. They're just trading online. It's no big deal where they're trading, but it's just that 1% event. Maybe their internet goes down, maybe their platform goes down, and they need someone and they can't get someone. And that's where it gets really expensive to not be with the right broker.
Maybe it's better if you don't need someone, but that you gain insights by talking to people that have wisdom and ideas, since we only have 2 eyeballs
That is
each of us.
correct also. Yes, thank you.
So anyway, so there's your commercial today, Carly.
Perfect. I appreciate it.
And I really appreciate you being a contributor to F.A.C.E over time,
Of
and
course.
the great views that you edify our community with. Merry Christmas, Carly.
Thank you. Merry Christmas. Thanks for having me.
All right, Happy New Year.
You too.
All right, everyone should follow Carly, check her out, and you could be with the team in a half an hour on the Morning Edge. Thanks for all your well wishes with my virus, and I'll see you guys tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.